For more on the markets and what options are telling us about equities right now, we want to bring in Amy Wu Silverman. She's the head of derivative strategy at RBC Capital Markets. I don't know, what are options telling us right now?
Well, it's funny because I think the last time I was here was the morning of Liberation Day, and it kind of feels like we've lived a lifetime, right? I feel like that. But, you know, the market may have round trip, Becky, but the derivatives market still remains pretty angsty. So if you actually just look from April 2nd to now, even with the S&P, you know, roughly returning most of those losses, VIX is higher, skew is higher, that demand for hedging, that concern has still wafted higher and hasn't declined. And I think that just speaks to the sentiment that we have about the uncertainty for the next few months, maybe even years.
Which means what? People are placing bets how?
Yeah, so it's interesting. I think going into Liberation Day, people were actually decently well hedged. And so essentially what you had happen was institutional investors were able to monetize those hedges. But then it kind of created these situations like the past 9 days where when there were rallies, they had to quickly participate in those rallies. And you saw that through either call option buying or trying to get long really quickly. But the reality is the overarching sentiment has still remained relatively bearish. And you still see that demand for people wanting to own tails on the left side and generally thinking that the market is going to be, you know, lower from here than it was a month ago.
And is the market generally right? Are the options trading generally right about that?
What I would say is when you look over time, the VIX itself tends to be a concurrent indicator. So it's sort of like a self-fulfilling prophecy. But the secondary metrics do tend to be a harbinger. Now, there are some kind of structural dynamics, like a lot of options trading has gone to be 0 day to expiry. So over 50% is now giving you tenors that are very short dated. So those signals are getting shorter, but they are leading indicators when you look at those secondary option metrics.
And the concern that's built up around this is right now we're hearing that we're going to get some trade deals potentially as early as this week. Does the market believe that? Is it acting as such?
You know, when I talk to our investor base, so institutional investors, I think it's kind of twofold. It's one, I think there's generally this concern that it was going to hit the hard data. It's just going to be a lag. And so you have this kind of duration mismatch in the market where this concern isn't showing up as much as it could in the VIX because each day we don't have a great move. That realized volatility is lower. But the reality is if you actually look at uncertainty versus volatility, there's still this massive gap, right? That the feeling of uncertainty is much higher and it tends to be, well, we just don't know when it's going to happen.
We've made a round trip, but you're still talking about the S&P and the Dow down by about 8 or 8.5%, and the Nasdaq down by about 11 or 12%. So you are seeing stocks kind of re-rated.
Yeah.
Is it enough to take in the uncertainty, or could it be enough to take in if we do end up getting some trade deals rather quickly, or some calming down of tensions, perhaps?
Look, if tomorrow Trump said, just kidding, you know, 10% tariffs across the board, perhaps. I don't think that's what most people think is going to happen. And most of the folks I talk to think there still is the potential for further downside from here. It's just a question of how protracted it is, right? If we get all these pull forwards and you see that now, it's just a question of that delay. And because of those structural questions I mentioned in the options market, where a lot of that tenor trading becomes shorter dated,
sure,
you're getting that signal a little bit shorter than you would otherwise expect when the options market was kind of trading 3 months was your most liquid tenor. So it's a little bit of a pickle for investors where there is this very negative sentiment, but they don't quite want to deploy it yet until they get, again, that harder data.